every candlestick has a wick. Every Renko does not have a wick, only some, right? And the reason for it is because that were usually extreme news or price point, but you don't, every brick does not get a wick, all right? And in order for the next brick to form, it has to be equivalent to the next one, right? So in order for this brick to form, it has to come down here. That's it. So 1 hour could move and this brick won't go nowhere, right? Until price gets down here. That's the only way a new brick is going to form, until price gets down here, all right? So this is a easier and a more simple way to look at the market. A lot of people have been sending me private messages, been telling me they've been having a lot of success going from candlesticks to this, right? You factor in your MACD, your other indicators, it makes trading a lot easier, right? Now, on the last session, what did we talk about? Using other indicators with Renkos, right? So we used what? Moving average, EMA, right? And what did I say about the EMA? What did we talk about? Let's see if you guys were paying attention. What did we talk about last week about the EMA? What did we say? Anybody recall? Yes, with the MACD is of course different with candlestick and Renkos. Absolutely, because again, you have one that factors in everything else when it comes to price. So look, candlesticks here, right? 1 hour on Renkos, 1 hour on candlesticks. So you see that? Look at the MACD here, look at the MACD here. Totally different because again, this focus on pure price. This focus on everything. So of course it's going to be different. Absolutely. Yeah. That's right. There you go. Good job. Good, good. Yes, the longer the period, the stronger the confirmation. It lags when trending. MACD is based on, yep, very good. The smaller the number, the tighter the entry will be. That is correct. There you go. There you go. There you go, guys. Good job. Right? So now, I'm going to show you guys how to put this even more together, right? We're going to go to next level. So, what's the next level? Instead of one EMA, what happens if we add another one, right? So I have a 9 EMA right now. Let's say I add, and somebody talked about this. I actually talked about this with my group. Let's say I add a smooth moving average, right? Anybody know the difference between an EMA and an SMMA? Anybody want to take a stab at it? Anybody know the difference between an EMA and a smooth moving average? Right? Anybody? Has anybody ever heard of the SMMA? There we go. Smooth reacts slower. There you go. There you go. Smooth acts slower. That's right. So with the smooth responds a lot slower, right? So let me make this a little bigger, right? So you have the red. The red is your SMMA. Your EMA is the blue. So exponential factors in price a lot sooner. SMA, the smooth moving average, it factors in literally the last 7 days of price, right? So it factors the last 7 days of price, divides it, so that's the overall average price. So the last 7 days of the overall average price, right? So the SMA moves slower than the EMA. EMA is factoring price right now. EMA is going to move a lot faster, right? So when you can use either or. When it comes to moving averages, it's all relative. The only reason why I'm bringing this up is because somebody asked me. So I thought it'd be important to explain it to you guys as well. The difference between the two. So again, when it comes to indicators, to me, honestly, it's all relative. It's how you use it, right? That's my rule of thumb. It's how you use it, right? Like a calculator. Depending on who you give the calculator to will determine if that calculator is useful or not. If I give a calculator to a complete idiot who knows nothing about mathematics, that calculator is useless. If I give it to somebody who's a wizard with mathematics, guess what? That calculator is life, right? It's the holy grail. So when it comes to moving averages, again, it all depends on what you're looking for and what you're trying to aim for. So me, I prefer EMAs over SMA, right? I prefer EMA because I'm trying to get the faster entry. Now, again, I didn't mean to take away that. What if I wanted to combine the two, right? What if I wanted to combine two? Whether 2 EMAs or 2 SMAs, right? Or one of both. You can do either or. So let's take one each. So I'm going to keep my EMA 9 input, right? And let's say I'm going to put my input here for the SMA. We're going to put 50. Right? Boom. Let's make this a little bit bigger and we're good to go. All right. Everybody see that? All right, perfect. Cool. So now I have 2 moving averages, right? Now this is actually going to help me a little bit further with my entries, with confirmations. And I'm going to show you guys how you can use 2 moving averages to help you enter the market a little bit faster, right? So this is how we're going to go about it. Let's say, again, if you're going to trade on Renkos, you should trade on Renkos. So let's say I identify a trend on Renkos, right? So for example, this uptrend on the 1 hour, price going up on this 1 hour, right? Boom. Now, based on the 1 hour time frame, I didn't get my crossover until right around here, right? But I'm late. I'm super late to the party, right? This started dropping all the way from up there. So I've missed about 90 pips, right? I've missed about 90 pips before I got in. Now, one thing you can do, and you should always do, is, again, my rule of thumb is you never enter the market on the time frame that you're analyzing price. So basically, if I'm analyzing price on the 1 hour, I drew my 1 hour trend line here. I want to jump down to a smaller time frame. So let's say I jump down to the 5 minute. Boom. So now guess what? Instead of my entry right here on the 1 hour, right, in this zone over here, now my entry is right up here. See the difference from how I zoomed in on the 5 minute all the way to the 1 hour? So this right here is your 1 hour entry, right? This zone right here, 1 hour entry. This right here, your 5 minute entry. Right? 5 minute entry, 1 hour entry. That's why I've always been telling you guys, you never ever enter on the time frame you analyze the market, right? Look at now your tight entry here. And guess what? Now let me ask you guys. Guess what? Where would my stop loss be at? Where do you guys think I would place my stop loss at? Talk to me. I know we got about a 30-second lag. Previous high. So previous high where? Where's my previous high? Where's my previous high? Is it all the way up here at the top? Is that my previous high up there? Is that my previous high? Is that what you guys are talking about up there? Just above my trend line. That's right. That is correct. Not all the way up there. Just above my trend line. That is correct. That is correct. That is correct. That is correct. Good job. You guys are learning. Good job. This would be my stop loss right there. This is how you get a nice risk to reward stop loss. This is your previous high, not this, not your highest point. So check this out. If I'm entering here on my cross, now guess what? I got a nice 10 pip stop loss, right? Stop loss here. 10 pip stop loss. And then look at that. From here all the way down to the 1 hour entry, you're up about 85 pips. Look at that. I'm risking 10 pips for 85 pips. You risk 10 pips for 85 pips. Tell me that's not a good risk to reward setup. Somebody tell me that's not a good risk to reward setup, right? So remember, my analysis is based off what? This 1 hour time frame, right? Always keep that in mind, guys. Don't lose focus on where your overall analysis is. All right, guys? Don't do that. Don't do that. Don't forget where your analysis came from. All right? Because what happens is people get on the 5 minute, and you know what they start doing? They start trading on the 5 minute. And now they think, oh, I had a crossover over here. Let me buy. No, no, no. 1 hour. Overall, we're looking for this sell. We're looking for this to come down. If anything, this is a pullback for a continuation down. So after this pullback, if anything, I'm looking to enter another sell position here. I hate when it does that. Ah. See? People always ask me, Steve, how do I stack my orders? How do I get extra orders and So my first order is there, 5 minute entry, right? I got a clear cross over here. Boom. And look at how this lines up with my MACD. When price broke this trend line here, I got my MACD cross over here. Right? Boom. Boom. Price came back up for my second sell entry. Boom. MACD crossover there. Boom. Look how that lines up. And then sell all the way down, right? Until you reach your target point, wherever that happens to be, right? Now, this is based off the 1 hour time frame. If I did a higher time frame, then I'd be looking for a bigger move to the downside. But my point is, and the lesson for tonight is, how to use multiple confirmation, right? What do we call that? What's the other term that a lot of you guys like to use, right? What do we call that? Multiple what? Multiple what? Confluence. There we go. That's right. Confluence. Right. For those who don't know what confluence is, by definition, multiple confirmation. Multiple confirmation. So now, what I'm doing here, guys, what I'm showing you is I'm showing you how to gain confidence in your trades. Right? Because without this, without the confidence in your trades, you don't buy or sell. Right? You look at any successful trader. I don't care who you look at, whoever your favorite trader happens to be. One thing they do not lack is confidence. But how do we gain confidence? Right? There's a difference between confidence and just being overly arrogant. Right? You have confident people, but they're completely stupid. They still don't know what they're doing. There's a difference between being confident and then being overly arrogant. When you're confident in your analysis because you have multiple confirmations going your way, right? I got the break of the trend line, right? I got my break of trend line. So I got break of trend line. I got my EMA crossovers, right? Double EMA crossover, right? So 1 confirmation, break of trend line, 2 confirmation, EMA crossover, 3 confirmation, MACD crossover. Everything is pointing sell. So if all my indicators, my analysis, everything is pointing a sell, guess what? I'm pretty confident to place my sell. I got a tight stop loss. Look at that, 10 pips. Guys, I have people in my group. It's not even about me anymore. Most of you guys, you've been following me for a year, 2 years. You already know what I can do trading, right? So it's not even about me anymore. It's about you guys. Right? Who cares about my results? I make $10,000, $20,000, $30,000. Nobody cares because I'm expected to do that. I naturally do that. I've been doing that. I've shown you guys multiple times when we used to be able to show profits and all that stuff. You guys seen that. Some of you guys, you've seen the withdrawals. You've seen the big accounts. But right now, this year, the focus is not me. It's not about me anymore. It's about you guys. It's about being able to take you guys and being able to help you secure 100, 200, 300 pips, and you have a tight stop loss. Right? There's some of you guys out there who believe you need a 200 pip stop loss in order to gain a 200, 300 pip trade. No, you do not. I just showed you 10 pips, and you could have grabbed about 80, 90 pips. That's a great risk to reward. That's a 1 to 7 risk to reward ratio. 1 to 8, actually. All right. This is about improving your confidence in the market. So I've already got rid of candlesticks for you. Now your judgment is not clouded by constantly seeing price fluctuate up and down. Now you see market for what it's really worth. I'm either going up or I'm either going down. Now, this is a lot easier to mark up. Look at this. I erase everything. Look at this. If I told you to draw your trend lines, identifying this is much easier. This is much easier to do. Much simpler to do. As opposed to candlesticks. Right? As opposed to candlesticks. Much simpler to do. Look at that. I can mark up charts all day on Renkos. Much cleaner. Identify my uptrends, my downtrends. Identify everything. And I can do this all day, every day. Right? So now we cleaned up the noise. I got rid of the noise for you. Right? I help you master one of the more important indicators in all of trading. Right? This alone, understanding how the MACD works, that alone has been life-changing for a lot of you guys. It's funny now when I watch you guys on social media or I go to other people's training, everybody's in love with the MACD. And now, putting everything together. Now trading becomes a lot simpler. Now you can take your trading game to that next level. For all you guys who are now trying to take your game to that very, very next level. Right? And that's what it's about. No, unfortunately, I can't put that on bounce back. It's pretty hard. All right. From what Steve Hooley and the other programmers told me, it's very difficult to take Renkos. As you can see on Renkos, you can't do certain things on candlesticks on Renkos. Right? It takes a lot of programming and coding to even get Renkos on your chart. Right? So trust me, I would have did it if that was the case. All right. Boom. So I'm gonna get to all the pairs. Don't ask me about UCAD, none of that. I'm gonna get to that. We're gonna look at that. I'll look at it on Renkos, all of that stuff. Focus to what I'm trying to tell you. Pay attention to what the information I'm trying to give you. All right? That's it. Don't worry about the other pairs right now. We will get to the pairs. I'm going to cover everything for you. All right? Don't worry about that. Worry about the information that I'm trying to relay to you so you understand when you're out there and you're trying to trade. All right? So, when you're out there and you're trading, remember, you need 3 things to be successful in trading. You need knowledge, you need risk management, and then you need discipline, right? So now you guys become a little bit more knowledgeable. With the last 2 sessions plus this, you're becoming more knowledgeable how Renkos work, right? Now you're gaining knowledge. Now, you know, with Renkos, you can even reduce your risk a lot easier as opposed to candlesticks. So no more, you don't even have to do the 50, 100 pip stop losses like some of you guys are doing. Right? I saw a YouTube video on IML using one of the products. I'm not going to say, but it kind of made me sick because, and this was coming from, you know, a master educator. Thank God we have over 100, so you guys will never guess. But and you know, their risk to reward was go for 10 pips and you're risking 50. That was literally the video, and it had about it had thousands of views. I'm not talking about, you know, thousands of views. So you have thousands of people looking at this and going, "Wow, you're risking 50." And your reward is 10. Right? You will never become a profitable trader if your risk to reward is like that. Never, ever, 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 ever. I'll tell you that right now. And I don't care who you tell. Stevenson said this. You can let them know if you happen to know the person. Oh, absolutely. That's terrible risk to reward management, right? Before all of this, if your risk to reward in trading is not good, it's not up to par, you will never be a profitable trader. I promise you that. I promise you that. All right? So, my goal between last week and tonight is to give you guys a different way to view the market, right? Help you analyze the charts from a different perspective in a way that nobody's really ever covered with you guys. Not that I know of, right? I know Oren just got into Renkos, right? Shout out to Oren, and he just launched his brand new product, Levels. For those who are using it, I hear it's doing very well. I hope it continues to do well. Shout out to him. But even Oren was not using Renkos before me. Anybody who's been following me, I've been on Renkos for a long, long time. So I say that to you guys because this is literally the purest and best way to look at price. I mean that. You can literally see and understand what the market is really trying to do just by looking at price from here compared to switching the candlesticks. All right? And that was my focus. Take your guys' game to that next level. Right? Take your guys' game to that next level. You can use Renkos on any time frame. The only reason why you only have it available on the daily is because you don't have a pro account. For those who don't know, if you want to use Renkos, you have to have a pro account. So the person who said you were doing some research and it's only showing on the daily, well, look at my time frame. I'm on the 1 hour. The reason why you only have it on the daily is because you don't have a pro account. So you have to upgrade your account on TradingView and switch over to pro to get access to the lower levels, right? That's what you have to do. All right? It's smooth, just SMA. Go to indicators, SMA. Smooth moving average. That's right there. All right? All right, let me show you guys another example, and then we can finally get into the charts. All right, somebody wanted to look at UCAD. So, right here, UCAD, boom. Right, I got this uptrend. Price reverse, right? So if I draw this trend line down here, this was pretty much from February 1st, right? Now look what happens. I'm on the daily. Look what happens when I go down to, let's say, the 1 hour, right? Let's say I jump down 2 time frames, right? Let's say I use my rules from bounce back. Like I always say, jump down 2 time frames. So I jump down 2 time frames. I'm on the 1 hour. See that cross? That would have been a tight entry. But check this out. The smaller the time frame, the tighter your entry can be. What if I told you guys, you can zoom even all the way down to the 1 minute. Right? What if you would have went all the way down to the 1 minute? What if I would have wanted to enter on the 1 minute all the way down here on USD CAD? Right? So I already have this marked up. Right? So let's say I jump from the 1 hour all the way down to the 1 minute now. So boom. See, this is where I drew that trend line on the 1 hour time frame. Right? So price broke down under. So if I'm going to get really that move to the upside, I need to watch price right around here. So watch when I zoom all the way down to that 1 hour time frame. The moment this breaks out from right here, I got my entry. I got my entry in pretty much two places, right? From right here and from right here. And check this out. I have a stop loss of no more than 17 pips. 17 pips here, 17 pips there. And your move all the way to the upside of 300 pips. Hopefully you guys can see that. There you go. You see that? The 277? Right? From there all the way up. See that? 277, 300 pips. 17 pips for 300 pips. Clean move to the upside. And it took no longer than 10 days. 10 days and 8 hours. All on the 1 minute time frame. 17 pips for 303 pips. All the way to the upside. On the 1 minute time frame. And you can literally trade like this all day, every day. And that's what me and a lot of my students do. I have one guy, I don't know if he's on this call, had a major breakthrough on the team. And he was able to take $100 and flip it all the way to 13 grand with Renkos. With Renkos. $100 all the way to 13 grand with Renkos. And you guys can do the exact same thing. So the MACD, somebody asked me, how does the MACD work? All right, the MACD consists of three components. All right, so it consists of these two moving averages. That's what the MA stands for, moving average. The C and D is convergence, divergence. That's what it means. So moving average, convergence, divergence. So it's three components. It's the moving average and the mountain in the background. All right, kind of looks like, yeah, like a mountain. So but it's not that. It's called the histogram. And how it works is basically you're waiting for your moving average to cross the zero line crossover right here in the dead middle, either for a buy to go above your histogram or a sell to go below it. Right? So notice this downtrend right here. Notice how this is below the histogram. This uptrend right here, notice your two moving average are above your histogram. So the blue line is called your MACD line. The orange line is called your signal line. And what you're waiting for is when the blue crosses over the orange, you're looking to sell. Right? And when the blue crosses above the orange, right, after a downtrend, you're looking for a buy. But you're really looking for that trend reversal, right? That's all I care about with the MACD. I'm looking for a trend reversal. That's all I care, trend reversal. So I'm waiting for price, these two moving average, to cross the zero line crossover. Basically go through the histogram. So if it doesn't go through the histogram, I'm not getting in for a buy or sell. I don't care. You see how it went under the orange line? I didn't get in for it has to go through the histogram for me. That zero line crossover. That's how I know it's a true trend change. Because at any given moment, like it's doing now, price can come back up. All right? So this factors in everything. It factors momentum. It factors, price change. It lets you know when the trend is going to change. All of that stuff. That's why I think it's one of the best indicators in all of trading. All right? That's how it works. It only moves when price moves. So it'll always be a line. You'll never see this move by itself. It'll always move when price moves. And I'm seeing the moment price moves, that's when this MACD moves. All right. So guys, this is how I utilize Renkos. Practice, study it, watch this session, the last two sessions, specifically the last two sessions. If you really apply this to your trading, I think it'll take your game to the next level. Some people, for whatever reason, right, you just always have that small percentage. They'll find this difficult. I don't know why, but they will. And, you know, they'll stay on candlesticks. I basically showed you a different way of how to look at the market from a different perspective. And hopefully for a lot of you guys, it made life a little bit more simple. All right. So now we can get to the markets. We can analyze and see what's going on. All right. Let me switch over to candlesticks here. DXY. We've been in this for a while. As you guys can see, we're going to be here for a while. So what we're waiting for here is to see if price comes down here, touch here, and we get that breakout. We're watching for a breakout to the downside here. Right? If we don't get that breakout, one more move up. All right? I think